Welcome to the wealth building mini class, to diversify or not to diversify. I'm Millen Livis, financial independence mentor, and I am very happy to have you with me today. I appreciate that you're watching this video because I know that it's an indicator that you really want to know how to be the best at investing, how to invest strategically, and how to make your money work for you and grow your wealth. So in this two-part mini class series, how to diversify or not to diversify, I'm going to talk about benefits of having diversified investment portfolio and disadvantages, because everything has a front and a back. So I recently received a promotional email from Robert Kiyosaki, the famous author of The Rich Dad, Poor Dad, and a legendary real estate investor. So the headline on his sales page brought my attention. And of course, that was the goal, right? It was screaming, the headline was screaming about bad advice that people get. And specifically, the advice was about diversifying investments, and that people get this advice from licensed professionals. So here's what I recall reading in his promotional email. Many financial advisors recommend that you diversify for your own protection. What they fail to tell you is that it is also for their protection. Since most financial advisors cannot tell you exactly which stock or mutual fund is a great investment, they tell you to buy a bunch of them. And there was also a quote in this email, promotional email that I received from Robert Kiyosaki office. There was also a quote from the legendary investor Warren Buffett, and quote states, "Diversification is a protection against ignorance. It makes very little sense for those who know what they are doing." So I must say that for a split second, I was thinking like, what the heck? What the heck? And while I have great respect for both gentlemen, obviously, Robert Kiyosaki and Warren Buffett, I also know that both of them indeed diversify their investments amongst different asset classes. For example, Robert Kiyosaki invests in real estate, but also in the stock market and precious metals, to name a few. And Warren Buffett invest in the shares of companies of different sizes and from a wide variety of different industries. He's a great value investor. He is looking for companies that present great value. So I decided to clarify any confusion that some of you may feel about the pros and cons of diversification. And that's what we're going to talk about in this two-part mini class series, to diversify or not to diversify, today and next week. So let's begin with the definition of the diversification as it pertains to your investment portfolio. So in finance, diversification is the process of allocating capital in a way that reduces the exposure to any particular asset and that represents risk. A common path towards diversification is to reduce risk or volatility by investing in a variety of assets. In other words, the objective of diversification is to reduce the risk to your investment portfolio from the catastrophic loss of any single asset that your portfolio may contain. And if you want to invest, you must deal with the ups and downs of the markets, because all financial markets, without any exception, go through up-down cycles. And you want your portfolio to survive and grow over a longer period of time. So that's why having an investment strategy matters when it comes to investing in the financial markets for a long term. So from my personal experience, losing over 50% of my retirement funds that were invested in the stock of the company I used to work for during the financial crisis in the United States in 2008, 2009. And by studying and observing some of the most successful investors in the United States, I know that if you want to protect yourself from a market downturn, if you want to protect yourself from a market downturn, you must diversify. So let's look closer at the benefits of the diversification. And by the way, if you have any questions, please post them in the comments. I would love to hear what you think about this introduction, so to speak, to diversification before we start going over the benefits of diversification. Okay? So let's talk about 3 benefits of diversification. First is risk reduction. Any investment involves risk, and you can never eliminate risk completely. However, you can certainly manage your level of risk. Beginner investors must embrace risk because the potential long-term rewards make it worthwhile. It's always about evaluating the risk-reward ratio. Your level of risk must correspond to the level of potential rewards. So when you begin investing in your early 30s or 40s, you can afford taking high risk because your investment portfolio has enough time to recover should the financial markets hit that downturn. For example, an investment that declines in value by 50% must appreciate by 100% to recoup the original value, just to recoup the original value. So that it takes time, right? Later on in your life, in your late 50s or 60s, when you get closer to your retirement phase in life, you must be mindful about taking high risk with your investments because you don't want to experience devastating losses to your retirement portfolio during the economic downturn, and you may not simply have enough time to recover from these losses, right? So diversifying your portfolio amongst different assets that don't perform in a similar fashion during economic downturn, for example, gold and tech stocks. This allows you to reduce risk of losses from each particular asset. So many investors who fail to diversify amongst different asset classes during the economic downturn in 2008-2009 got themselves highly exposed to the stock market risk. I mentioned earlier that I lost a huge chunk of my retirement funds during this time, but I was diversified in other assets. So, I mean, I made mistake in one area, but I also was smart enough to be diversified, so I was not devastated. So diversifying into safer fixed income assets and precious metals, as well as using capital preservation strategy, can help you reduce the risk in your investment portfolio. Okay, so again, we talked about benefit number 1, which was risk reduction, benefit of the diversification, risk reduction. So please tell me if it makes sense. Tell me if you agree, disagree, and if you have any insights. Okay, all right, so move on. Let's move on to the next benefit of the diversification, which is capital preservation. If you paid attention, I mentioned capital preservation strategy in my previous point. And here's the truth. Some investors strive for capital appreciation, while others use capital preservation as an investment strategy. So capital preservation allows you to protect the capital that you have instead of focusing primarily on the rate of return on your investments. So diversification makes it easier for you to protect your capital, allocating money to different investments. Investing in a variety of assets reduces risk, especially comparing to investing in a limited number of stocks in the same industry. For example, some investors only invest in technology, or some prefer bank stocks. So you do not have to worry about some bad apples, like for example, Lehman Brothers, which I used to own. You don't need to worry about some bad apples crushing your retirement portfolio if you lessen the impact that these stocks have on your portfolio by diversifying your investments. Like I said earlier, even though I lost a bit of money while investing in the Lehman Brothers, it was a small drop for my portfolio value, and I learned a lesson. So in addition to risk reduction and capital preservation, you can also hedge your portfolio when you use diversification as your investment strategy and risk management strategy. So again, if you have any questions, please let me know, post them in the comments. I want to hear your insights, and I will definitely reply to them. And for the sake of time, let's move on to the third benefit of the diversification, which is hedging your portfolio. Using diversification strategy can help grow your portfolio during bull markets, when markets boom, go up, and during bear markets, when markets turn downward. So investors who have had 100% equity portfolios, meaning that they had 100% stock assets in their portfolio, over the past 10 years have seen relatively poor to average returns if they only had 100% equity in their portfolios. If they had diversified their portfolio by including asset classes like precious metals, commodities, and bonds, they would likely have experienced a little bit higher returns. I don't know by how much, because it's a very general estimation, but they would experience higher returns. In other words, diversification allows investors to achieve positive returns in some asset classes, like, for example, precious metals, when another asset class, for example, stocks or equity, which is the same, equity, stocks, it's synonyms. So when, for example, other asset class like equity is generating relatively negative returns. So what is the bottom line here? Again, I'm inviting you and encouraging you to post your comments and questions. I will definitely make sure that I will answer. So what is the bottom line here? Diversification offers a number of benefits to investors. It is appropriate for passive investors, those who don't invest full-time, for risk-averse investors, those who have a very low risk tolerance, and for prudent strategic investors. It has been my experience after investing in the stock market for over 25 years that diversification helps protect your capital from market volatility, while at the same time allows you to achieve long-term growth in your investment portfolio. However, diversification has its drawbacks as well. Remember, everything has a front and a back. So I will talk about the potential downsides of the diversification in the next, in the part 2 of this mini class series, to diversify or not to diversify. So stay tuned. I will talk about potential downsides of diversification in the next part 2 video of this mini class. And so I just want to tell you that I really appreciate you taking time to watch this video, because I know that, like I said at the beginning, it tells me that you really want to be the greatest strategic investor you can be. And if you're looking for additional resources, I offer, in the area of financial education, I offer a lot of resources on my website, daretochange.live.com, especially if you want to see which courses I offer, a variety of different trainings. You can look at a study, I think it's called Training with Millen or Work with Millen, right? So on this page, you can find very wide variety of programs for everyone, for beginners, for more advanced investors, etc. So again, daretochange.life.com, that's where you can find a lot of valuable resources. And if you want if you want real-time support, yeah, I can say personal support, I encourage you to join my very supportive, amazing community on Facebook. It's called Wealth Building for Powerful Women. Wealth Building for Powerful Women. I invite you to join this community, and you will get real-time support not only from me, but from other amazing, powerful women there. So with this being said, I wish you a wonderful day today. I look forward to seeing your comments, seeing your insights, and I will see you next week, same place, same time, for your health, wealth, and freedom.